Good morning, everyone. Hey, good morning to everyone. Hey, Bob, Alison, Graham, Rodney, Sharon, Luke, Chris, good morning to you guys. Hopefully you're well, wherever you are. Hope you had a good weekend. Welcome to another Wealth Coffee Chat, folks. Wealth Coffee Chat. Jason Witten's my name. Anyone who's new, say a quick hello in the chat. Let us know where you're from. We've been doing these Wealth Coffee Chats for a little while now. Around about 8:10 each weekday, Monday to Friday-ish. We hang out. We chat about property investing. Morning, Brendan. Hey, morning, Carl. First time. Hey, thanks for joining us, mate. Fabulous to have you here. Welcome along. If you guys don't know, these Wealth Coffee Chats go live every morning at 8:10, as I said before, but they go live in YouTube. They go live in Facebook, the page and the mentoring group. And also they get turned into a podcast on Spotify and what's the other one? iTunes. So if you miss them, you can download them and listen to them as a bit of a podcast as well, folks. So tap in, get the hang of that. I've been property investing. Many of you guys know this, well over 20 years, coaching and helping property investors over 18 as a professional property investment coach and mentor with my team across Australia and New Zealand. And we've done thousands and thousands and thousands of deals. And along the way, we've learned a few things from plenty of mistakes and plenty of successes. And each morning we share that with you guys. Share some of the ideas, strategies, thoughts around what's going on, what's for real and what's not for real. And something that's for real right now is the land tax changes in Queensland. Anyone want to put in the chat what those land tax changes are? I'll tell you in a second, but I thought I might ask if anyone is across it, or have you heard about the land tax changes in Queensland, folks? Let me know in the chat, because they fundamentally will be something interesting or important to understand as a property investor. We have some exposure to the marketplace, and our biggest expense is often our taxes. All right, yeah, there you go. Alison is on it. Cumulative assessment of land tax values across all states. Stupid move indeed, Mahan, Alison. The New South Wales government did something many years ago, which was called the exit tax. The exit tax. Not only did you pay capital gains tax to the ATO, but the state tax wanted a piece of the capital gain as well. And they really poleaxed the New South Wales market, which is quite annoying. So, a few things we will chat about this morning. So stick with us when it comes to that. We'll have a little dive into a little debrief on this silly tax, stupid tax. It's a stupid move indeed. Hey, but listen, we have some forces, folks, that can move markets, and I'm not of the opinion yet that this will affect the market values just yet, but I think it will affect people's consideration of where they might invest, certainly. So tell me, we have some forces that, there's 6 forces we talk about often that move the marketplace up and down or sideways, or can influence the marketplace. Tell me in the chat if you guys know these forces, okay? And which one of these 6 forces are the ones that are the most dangerous or the most ludicrous as we go along. Hey, good morning, Ashley. Kylie, good morning to you. Jeff, online. Yeah, well, it's an interesting one, isn't it? Let's see how we go with with those things. All right. Politics is our interest rates. Okay, let's go through this just quickly. We lay a little bit of a scene for our chat this morning. So interest rates, you guys know that can heat a market up or cool a market down. Interest rates, supply and demand as we go along. Politics. It's this one. Politics is the most dangerous one, folks. It's the one that can really, like, they're loonies, right? Like, one group get in and they change, like what's going on now. Up in Queensland, they're going to go, oh, that's it, we'll change some taxes. They're always trying to tax property investors. They should just get themselves together, this lot. Anyway, don't start me on that one today. As we go along, here we go. So, politics, we've got employment. We've got population, which is sort of immigration, internal, external, immigration, population growth, and we've got infrastructure, investment, et cetera, et cetera. And certainly, Bob, rental yields part of the supply and demand curve. Right now, rentals, vacancy rates are at literally an all-time low in many places. That means rents are going up. Interestingly enough, that the Adelaide government, and I'm going to check this out as well, so this is not 100% confirmed yet, but the South Australian government is looking to put rent controls in. So, and this is the one, like I said this on one of the Wine and Wisdoms not so long ago. The number one risk we face right now as property investors is going to be that the governments attempt to do rent control and limit our ability to offset our expenses as these interest rates go up, okay? Because their inability, their ineptitude of managing the supply chain, the property supply chain, throw all this money at the marketplace, record money, and then, sorry, we blew up the marketplace. Sorry, there's nowhere to live. You know what we're going to do now? We're going to now make the property investors pay for that because we're a bunch of morons and we don't know our bum from our ear hole. Like, so annoying, so annoying. Anyway, folks, let's talk about the thing today, which is, a spin-off of politics. And they do, their tricks are this, right? Taxes, they're a pain in the ass with taxes, and some sort of controls, right? Okay, they launched the APRA, they launched the APRA investigation. Let's, all these lenders are, being silly, whatever, blah, blah, blah. It's ludicrous. It's ludicrous. Yes, indeed. Well, Bahan, you're right. We did have a significant amount, a significant amount of people moving from the southern states. So, I think it was close to 45,000 people all up as we go. They're trying to control inflation. That's right. They're a bit behind the times. Anyway, let's have a bit of a look at this. What are the strategies? What can we do, folks? Is it sort of all over Red Rover and we just have to, stand there and take it? Is that the case right now? While it's very annoying, and while that's a terrible drawing of Australia, it doesn't get any better ever, Alison. I'm trying to actually draw something decent, but there we go. We'll whack Canberra in there. All right. Well, listen, that's a drawing of Australia. Okay, just so you guys know, and it's not a perfect drawing, but you kind of get what I mean, right? Now, how do we, as property investors, navigate this challenge? And there's a couple of ways to navigate this challenge, okay? There's a couple of ways to navigate this land tax challenge as well. So, land tax, how do we manage it? Land tax. So, a little while ago, it used to be, thanks, Chris. It used to be a state-based tax, okay? So you used to be able to go, I'll do one here, one there, 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 and you know, you would be able to manage the state-based tax as you go, okay? Right now, Queensland has put a bit of a stop to that. Like we said, they say, listen, if you've got one here and you've got one in these other areas, we're going to add them all up. We're going to add them all up to then charge you land tax, okay? So that's going to be a real pain in the neck. However, should that stop you from investing in Queensland? The answer is no. Remember, you've got to there's thresholds and all of that other stuff. Okay, so they still have to abide by the thresholds in each of the states and et cetera, et cetera. However, how do we do this? How do we manage this? Okay, the other part to managing this will be, ladies and gents, ownership. Ownership. Okay, so what do you guys think? I'm giving you a bit of a yeah, you're dead right, Stephen. It's ludicrous. Like just we all sit here just speechless. You're going like, what? How can yeah. Well, let's hope they overhaul all these bloody taxes, Lauren. To be honest, you know, the GST was brought in with the promise of eliminating stamp duty. Didn't happen. You know, it's a bit of a joke, to be honest. So that's why we as property investors, that's why, folks, listen, I get a lot of people going, yep, Jeff, you're on it, mate. You're on it. I get a lot of people saying to me, oh, listen, you know, negative gearing, you know, it's terrible for the economy or claiming the taxes. And I'm like, are you even listening to what you're saying here? There's capital gains tax, there's stamp duty now, there's land tax across the country. You know, negative gearing and claiming your tax back on your income is really the major way you can offset this other tax madness, folks, as we go along. Yeah, you're not wrong. Yeah. Yeah, it's just anyway. There's a few things. The one to watch, to be honest, folks. The one to watch right now is, you know, if the rent control issues get up and out for investors. But I said, what's the trick here? Not really the trick, but what can you manage? How can you navigate this as a property investor as we go forward? And right now, you can navigate it via the ownership process, okay? So let's say we have, the old traditional couple here with a couple of rugrats, okay? If this couple wanted to own and invest in some real estate, so what could happen very easily, you could have one. You could have an SMSF have one. And technically, and I probably wouldn't do it this way, but if you really wanted to own in Queensland, then this is another way you could do it. Especially if you're owning some commercial real estate, or if you're a business owner or whatever it is, company and trust, you could have one. So in that way, you could own potentially 4 pieces of real estate, all in separate names, different ownership entities, and not break the threshold, and or not have a connection across state, let's say. You know, the SMSF and a company trust owns them in QLD, and then maybe in your personal name, you buy down here, you buy over here, you buy here, you buy here, and you buy here. Okay? Now, let's put it into practicality for us as an investor. Is that frozen? It's frozen. Let me see if I can get off this for a second. My iPad's frozen, unfortunately, and I'll turn it off, and then I'll turn the sharing back on. So, how do we navigate this as investors? Right now we do have, I'll do a bit of an update on the old land tax stuff for sure, Alison. Let's see if the iPad's working better now. There we go. So, often, and this is kind of general, but we're talking here, what do investors do? Most of the investors, I got me a call here from somebody. All right. I better turn that off. Live, eh? Live television. So, investment properties, between 5 and 7. As an investor, most of us are aiming around that. We've got a PPR, okay, usually 1, but 2 to 3 times upgrade. And usually, if you're involved in business and stuff like that, we might get involved in a commercial property or something like that. Sometimes people buy investment properties as well. So times 1 property. So between there, you're looking at sort of 5 to 8 or 9 properties across a portfolio. So how do we navigate that? Again, this just comes down to the conversation is, as property investors, we need to be navigating our strategy and our tactics, and we need to keep an eye on things. One of the reasons we've always said when it comes to our strategy, folks, there is a lot of reasons why we have this diversification strategy as part of our teachings and our coaching here at Positive. All right? Diversify. I mean, a few of you guys have heard it. Maybe put it in the chat for me. When you have sat down with our coaches, myself and other coaches, we talk about the diversification process for your wealth and safety. And that process has always been, of those 5 to 7 properties, ladies and gents, of those 5 to 7 properties, you might want, 2 here, 2 here, 1 in Canberra, 2 in Victoria. Maybe that's how you do your portfolio, okay? And that is why we've always said diversify across different states and territories for economic reasons, for political reasons, for vacancy reasons, for job reasons, all sorts of stuff. So this, again, just reinforces one of those reasons why we would stick with a diversification strategy as a process of going forward. So there you go, folks. Wealth Coffee Chat done and dusted for today. It's certainly an absolute pain in the neck, a real annoyance when it comes to the tax maneuvers and management we have to have. But, like I've said thousands of times, politicians are the number one problem economically this country will ever have. Unfortunately, most of them are maniacs. Anyway, there you go. All right. At the moment, it's only Queensland that is proposing these changes, Bob. Now, listen, other states will be like, I'm not going to do that because investors will flow into those other states. You watch. Other states won't do it because they want the investors to come, right? So it'll be interesting. There's Victoria wants investors to come back into its economy. Western Australia wants investors to come back into its economy. It hasn't had investors for a long time. New South Wales could take it or leave it. Canberra, You watch. The 5-city strategy, you're dead right. Hardick, that is it. All right, folks. Wealth Coffee Chat done and dusted. Join me again tomorrow for another one. Remember tonight, ladies and gents, we have our mentoring night on tonight. 2 hours with myself, Sam Saggers, Tabitha, and we have a very special guest tonight from the McCrindle Institute talking about demographics. The largest wealth transfer in Australian history is coming. Are you in place? Do you know where it is and what it is? I'm not going to give it away because you've got to come tonight. All right? Get yourself along to mentoring tonight, folks. Remember, it's on Monday, and you should have received an email, or it's in the Facebook group. All the details, folks. There you go. All right, see you tonight if you're coming. If not, see you tomorrow at 8:10. Thanks for joining me, folks. Have a good one. McCrindle. Yep. Yeah, I love the data. All right, folks. Be good. See you tonight. Bye-bye.